Right, if your mortgage deal's up any time this year, put the kettle on and give me 2 minutes. Because last week a number of lenders went on a bit of a rate cutting spree. Now a quick bit of context first. The Bank of England base rate hasn't actually moved. It's still sitting where it's been all year, and the bank meets again this Thursday with most people betting on no change. So none of this week's action came from the Bank of England. This was the lenders themselves deciding to sharpen their pencils because their own funding costs have eased and they're elbowing each other for your business ahead of the big remortgage season. Think of it like the supermarkets in a price war. The headline rate of inflation isn't doing it, the shops just want you through the door. So what actually happened? Well, first the big high street names. NatWest cut its rates not once, not twice, but 3 times in a fortnight. Halifax, which is the biggest mortgage lender in the country, trimmed across first-time buyer, home mover and remortgage deals. Barclays, HSBC, Santander, TSB and a few others all nudged downwards too. And when the giants move together like that, it tends to drag the whole market with them, and that's good news whether you're buying your first place or coming off a fixed rate. And secondly, and this is the bit I love, 2 of our local building societies got in on it too. Coventry and Skipton both lined up cuts which landed this morning. So while everyone assumes the good deals only come from the big banks, the building societies right on our doorsteps here in the Midlands are pulling rates down at the same time. Proof that it always pays to look wider than the names on the high street. And thirdly, landlords, this one's for you. Paragon cut right across its range and brought in a new tracker option. Foundation reshaped its range for more complex stuff like HMOs and holiday lets. So if you're a landlord, personal or limited company, the direction of travel there is friendlier than it's been in a while. And there was also a quieter one that matters a lot more than it sounds. Hodge actually eased some of its affordability rules, including counting more of your bonus income. Now that's not a rate, that's how much you're actually allowed to borrow. And for a lot of people, that's the difference between the house and not the house. So what should you do with all this? If your current deal ends within the next 6 months, this is your nudge. You can usually lock in a new rate up to 6 months ahead, so if things keep drifting down, you ride it lower. And if rates do bounce back up, which is what a few experts have warned us of, then you've protected yourself. That's the whole game. You're not trying to time the bottom, you're giving yourself options. Have a chat, get your paperwork ready, and you're in the driving seat instead of the passenger seat. I'm Patrick.weightman, your local East Midlands mortgage and protection advisor, serving clients up and down the UK. Drop me a like and a follow for more and hit the links in my bio to get in touch. Your home may be repossessed if you do not keep up repayments on your mortgage. Speak to you soon. Bye-bye.